have some interesting signals to keep you updated. The Dow Jones Industrial Average is doing everything in its power to currently crack this little support area that's been building over the past 3 or so weeks. Interest session so far today being Wednesday, we did push down below this critical area below yesterday's intraday low. However, once again, the dip buyers are showing back up on the Dow Jones Industrial Average. We still have about 2 hours of trade until close, so it's going to be interesting how we round out Wednesday's session worth of trading, but it is very important to keep your eye on this general and very rough area for the Dow Jones Industrial Average. I've spoken about just how important this rising 20 exponential moving average. At the moment, we are trying to push on down below it. We have spent the majority of Wednesday below it. And if we do see, again, a definitive close below this area and then a break below that close, well, then that will signal in most likely for the Dow Jones Industrial Average to pull on back down to roughly that 22,950 area, or that psychological round number coming in at 23,000. All right, so think about that with the Dow Jones Industrial Average. Also, with the US dollar index, we are starting to see the first potential reversal signal right in this green rectangular box. You can see right here, this candlestick, it is still under construction. However, it is mimicking that of a hammer at support. Why am I calling this support? The reason this is support is because it is the back test of this inverse head and shoulders pattern. So what I'm assuming is that over the coming days, potentially a week or so, if we continue to see support build around this critical area, the intraday low so far for the US dollar has registered at 93.4. If we continue to build here and allow those oscillating indicators to begin to turn back up, or at least allow the MACD to turn up from this more neutral line, which is a little bit lower, and we still have a little bit more of, I guess, a bearish pullback to occur before we see this, well, then that is going to be the true buy signal, which should show up on the US dollar index. So this trade is continuing to form. This is the first real bullish type of signal, although it is relatively weak at this particular point. This isn't the strongest of bullish reversal signals, but this lower wick at this support area is suggesting that buyers are starting to show up and bid the price of the US dollar index a little bit higher. So the support area is being respected, and I want you to understand that. Now also, we've got GLD vice versa has gapped up. However, we're pushing back into Tuesday's candle. This is mimicking that of a bearish piercing pattern, a very strong reversal signal. So as the support continues to build on the US dollar, expect, of course, weakness to flow into commodities as well. And this is just another bearish signal that we've begun and continued to see since late October 2017 continue to form. So it's looking as though, again, any opportunity where we're seeing commodities gap up on the open, people are selling it. All right, we're going to have to pay attention to volume as it continues to build throughout the day. And we'll recap that when we see that closing volume bar. Also for silver, very similar picture. We gapped up to begin Wednesday's day's worth of trade. But you can see, although we don't have a bearish piercing pattern, this is very close to that of a dark cloud cover or a bearish counterattack. So these are very bearish continuation signals, or at least reversal signals, although we haven't seen, again, the breakout or breakdown of this symmetrical triangle. Again, this is largely contingent on that of the US dollar. But again, this is a very important relationship, and there's going to be a lot of opportunity to take advantage of when we see that directional movement in the US dollar form. Now, also, outside of this discussion at the moment, I want to speak about Apple at the moment. I referenced this over the weekend, more so to do with the actual markets themselves, because what we've seen towards the end of this most recent bullish advance, until we've sort of, pitted up here at about 23,000 on the Dow Jones Industrial Average, has been a number of bullish gaps. Now, these gaps, although they have looked like continuation gaps up until this point, we're starting to see some reversal patterns take place across the board for the market indices, but also sort of extending that discussion also in a lot of individual companies. And I want to speak about Apple, but before we get there, I can show you this also. We've got another doji candlestick on the S&P. As I sit down and record this, we've got a multitude of hangman candles at this resistance area forming across the market. So again, we're expecting the markets to move into a slowdown. But this is where I was taking the discussion. This is the stock, or at least the chart of Apple. Now, Apple again has seen a pretty meteoric rise since its earnings announcement. I mean, we sort of rallied into earnings. We saw the initial gap to the upside. It was looking like a very healthy continuation to the upside. But what is interesting to point out is that during today's session, and I still note, and I want you to note that we have about 2 hours approximately left of trade, Well, we do have a gap in the opposite direction. This is the candlestick, or the current candlestick construction as at Wednesday. And what I want you to pay attention to is this bearish gap in the opposite direction. Now that we have the bullish gap over here, which is looking to sort of exhaust itself, it looks as though we have a short-term rounding top and then this subsequent gap in the opposite direction. This is looking like that of an island reversal. So if I just draw that for you, you can see that this is essentially the island, these candlesticks within this circle on my screen. So although in terms of chart patterns, this is a relatively bearish chart, what is good to know also is that we still have gap support showing up, and on top of that we still have these rising exponential moving averages. So I'm not all out bearish on Apple. As long as we hold around this 20 exponential moving average, there's a good chance that we come on all the way back up to 175 and potentially continue this bullish breakout above 176. But I just wanted to note right now at this particular point, we have potentially that of an island reversal taking place, but we are still holding true to the original analysis, which is that the gap should fill, and generally gaps fill in markets. They also fill with individual stocks as well, and it looks as though Apple is essentially filling that gap or trying very close to close that during today's session. But at the same time, we've just established that of a bearish gap in the opposite direction. Volume is important too. We are not seeing volume expansion on this gap at the moment. So it looks as though this, or at least the the reasoning, or at least the analysis, which is suggesting that this is an island reversal, it's not being confirmed by volume. So it takes away from the actual chart pattern itself. If we saw an elevated volume spike during today's session after this gap, well then it would lead more evidence to suggest that this is a true island reversal pattern. So we're just going to have to pay attention to what that closing print of the daily volume is for Apple on the sell side if it continues to remain net negative during today's trading session. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.